Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The inflation cooling narrative got one big boost. UK, which seems pretty late to the camp, finally printed a significantly lower number than expected for inflation. While it still remains high, but it does give some comfort to the policymakers as their efforts start kicking in. Let's hear from JK his thoughts on the UK inflation data and the somewhat of a broad dollar recovery theme which is going on. Over to you, JK.
Good morning, Saraj. Yes, I think like I pointed out yesterday, a lot of focus is still on inflation and central banks. And UK inflation coming lower just on the back of the lower number from Canada previous day is good news for the markets, particularly on the risk assets. And the important point is that in all parameters, the inflation in UK was down. It's a core month-on-month, core year-on-year, and as well as the headline inflation, all of them, even the PPI input and output costs were lower. So overall, that was a good news for UK inflation watchers, and immediate market reaction was immediate. Sterling falling by nearly 1% against the dollar. It was anyway overbought, and then we had peak pricing in UK rates, which was at 6% plus, is now between 5.75 and 6, and that's going to undergo more revisions as we get further data. Of course, the fact that BOE might hike rate by 50 basis points in on August, which was at 60% probable, has come to 40% probability. Or rather 60% probability of a 0.25% change. So all these big changes, and then apart from the UK, news on the inflation, we also had Japanese, central bank chief talking about overall their narrative on monetary policy remaining unchanged. That was another thing that gave boost to the sentiment in the markets. Then also we had the China, where while they retained the 1 year and 5 year loan prime rate today unchanged, they made some changes, raising the cross-border macro-prudential adjustment ratio for corporate and financial institutions higher from 1.25 to 1.5, and this move is meant to make it easier for domestic firms to raise funds from overseas markets, and this would actually result in higher flows. Not just that, even central bank also fixed Yuan central rate much lower than where the market was trading. Market was trading at 7.23 in offshore, and now after the fixing and this news, market has slipped a bit at 7.18 to 7.19, and so it also shows how much the Yuan has been oversold. Now, actually, while there are hints that the Chinese authorities are going to introduce big stimulus, but it's still not very much clear what they're going to announce, and when it is going to come. But market will be waiting for that, and if really something substantive, we can see a much larger rally in the Chinese one, which looks oversold. We also had a couple of other news in the Asian time today. Japanese trade balance swung into black for the first time in 23 months. That's from 1.38 trillion yen deficit to 43 billion yen surplus. Point to notice, this is mainly the huge drop in imports by about 13%, and this drop in imports is in keeping with the overall global trade trend slowing. In any case, that has helped the yen also to recover from close to 140 overnight to around the low 139.20, 30 as well. We also had a good employment data from Australia today. Job numbers were new job numbers were at 32,600 versus 15,000 expected. Unemployment rate was lower at 3.5 versus 3.6%. All in all this news has actually been creating a lot of volatility in the yields. Of course, the UK yields fell by more than 20 basis points immediately after the news, but that also rubbed off on other yields in Europe as well as USA. To start with, we did have a fall, particularly in the longer end in Europe as well as in USA. But US yields ticked up before the issuance of 12 billion of new 20-year bonds. But after a very good response that was seen, the yields fell down. But this important point to note is that the front-end yields, the 2-year yield has actually been a little higher. That means, we have once again an inversion between 2-year and 10-year above 100 basis points, and that is not going away in a hurry. For the stocks, of course, fall in inflation accompanied by much better than expected corporate numbers have seen the markets inch up further. The surprise yesterday was the regional banks index has risen again 2.9%, and that's actually because markets were concerned about regional banks whose deposits might have fallen in the recent months, but actually that has actually given a big boost to the Dow. Now Dow had a 8-day rally, and possibly some sort of exhaustion should come in, and we should see some correction in the Dow. Also, very interesting to note that S&P 500 is now almost 27%, 27.6% from the low of 2022, and is just 4.8% away from its all-time high. So we all know that the Indian market's already trading at its all-time high. Yesterday, FTSE was up by 1.2% after the inflation number came down. So good reaction in yields, good inflation number, corporate numbers, and all these giving rise to overall good sentiment in the markets. On the dollar, of course, on the back of sterling falling, euro also had some mild correction, dollar index inching back above 100, but really it's waiting for next trigger to push it either way, but overall the structure of the chart show that dollar index is headed down, but it can have some more consolidation in terms of time. We need to obviously wait now for the next week's big event of FOMC, and before that we'll have some numbers from UK also on the retail sales. So those are numbers that we can look forward to. On the Indian rupee, not much to talk about. Indian rupee did not participate in the dollar's rally in the last 2 days, and it's not surprising because it did not participate in the dollar's fall as well. So it's been moving on its own based on the flows and the central bank breathing down on the neck of the market. So it's once again confined in a very narrow range. People are still to see if larger flows coming at lower level can see that RBI relent the rate to go down. So it's really a toss up as of now. We'll wait and see. Thank you.
Thank you, JK. And the major theme yesterday remains the UK inflation, which trended lower on all parameters, and it also pulled down the probability of BOE hiking rates by 50 basis in August, which has come down by nearly 20% to 40%. Chinese central bank set the yuan fixing at quite a strong level, leading to some strength in the pair, while the US 2 to 10-year yield curve inversion has again widened to 100 basis. It's possible to get some profit-taking moves when it comes to US equities, which had a good run. INR, of course, did not participate in dollars rally, just like it didn't participate in the dollars fall. So a narrow range for the pair continues. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets. Thank you.